So why now? I guess that's the question, because, we've been hearing investors like Jim Chanos and even basically Ken Rogoff, the economist, saying that property development is just out of control in China.
Yeah, what we have seen is in the recent months, the transaction volume in China property sector have come down substantially across many cities. Right after the recent round of tightening policies announced targeting property sector in January. We have seen no sign of easing or loosening of such restrictive policies. That's why we believe the transaction volume will continue to be under pressure in the near future, which make us believe, the sales performance of the developers are highly uncertain. On the other hand, the leverage has shot up in the recent months. As you can see, from January to May this year, a lot of the developers, they have issued offshore bond, which we had a big figure of $8 billion equivalent in 5 months for one single sector. So we have a combination of uncertain cash flow prospect, at the same time high leverage, which we believe, making a lot of the developers closer to our rating downgrade triggers, which really is a rationale for us to revise the sector outlook.
Right, and you're expecting more negative downgrades in the next 12 months.
We could see more negative rating actions.
Okay, so you're saying that they're highly leveraged. They sold about $8 billion worth of bonds just in a 5-month period, is that right?
Yeah.
Okay, so, and transaction volumes are down. So what are they using this cash for?
They are still kind of actively building.
But why, if no one's buying?
I think like last year, in April, there was austerity measures. But then the volume came down but rebounded. So I think some of the developers still being optimistic and hoping the market can rebound at some point. But in our view, the January measure this year, they are one of the most strict since the housing reform in the 1998. Something like you cannot buy property in the city if you don't pay tax for 3-5 years.
Right.
So it's really killing a lot of demand.
Yeah.
So we feel this round of measure, if implemented properly, it's going to have a more severe impact compared with the previous.
And take a look at the nationwide prices rising just 0.5% in May.
Yeah.
I mean, what does that mean for, I guess, pricing in China? That's still a gain, though, let's be honest, 0.5%.
Yeah.
But when are we actually going to see a fall in prices?
What we have seen is obviously the growth rate of the housing price has moderated since this year.
But they're still gaining, that's what I'm saying.
It's still in the positive
price
territory. Yeah. That's what we're seeing actually in the next 6 to 12 months. Because of the transaction volume are low, the properties developers, their liquidity will be dried up pretty soon if they don't keep selling. That's why I believe there is a strong incentive for them to start to think about cutting price in the near future. So in our base case scenario, we have a 10% down in the next 12 months as the base case.
Okay, 10% in home prices falling, right?
Yeah.
Okay, so can you sum it up for me? If you have prices falling, volumes down, you have huge leverage, are we expecting a crash in the property sector?
That's not our current base case, because if the developers can take a proactive and realistic pricing strategy, which is to adjust down the selling price, we think the volume, there's a potential for volume to recover somewhat. And the central government, at the end of the day, I don't think the government wants the sector to have a hard landing or kind of crash.
Okay.
So yeah.
Okay, so we were talking about this earlier with Jim Chanos as well, who says basically China's on a treadmill to hell because you can't count on property building to account for such a huge amount of your GDP. But China's an emerging economy. You have 1.3 billion people. Not all of them have housing. They're all looking to, of course, gain in terms of using their wealth as well. I mean, is that necessarily true? Is China on a treadmill to hell because they have invested so much in property?
I think, after all, property sector is an important sector for a kind of emerging economy like China. And a lot of the local government, as we all know, they are highly kind of dependent on the property or land sale related revenue to build other infrastructures and to maintain the current GDP growth.
Right.
So I think at the end of the day, it's still a very important sector. But what the government wants to do is like the social housing.
Right.
That's something they need to resolve the low income kind of percentile population's living needs so that they can ease the social unrest about the rising housing price.
Okay.